and the best SBA loans for 2022 and beyond are. Hi, welcome in. My name is Michael with Viral Funding Solutions. And in this video, I'm going to go in depth to show you all of your SBA loan options and which one best suits your needs. So by the time you're done watching this video, you'll walk away with 110% confidence and certainty that, hey, that's the SBA program I am able to get. Or if not, what other options are available, as well as, if you stick with me, you're going to find out the fastest and easiest SBA process out on the market today with a 90% approval. This is an amazing one that mixes multiple services with the SBA 7A program. So you'll want to stick around for that. Let's get right into it. We're looking at the SBA funding programs page, and I'm going to use this as guidance, and I'm going to get into a little document that you may have or may have not seen, and I'm going to talk about what the fastest and easiest SBA process is out on the market today. What are the rates? What are you looking at with this current economy, this impending recession, and everything happening with the world right now? So right here, we are going to scroll down and see part of the process: lending partner, the loan, small business is you. SBA reduces risk and enables easier access to capital. I'm also going to talk about whether these options make sense or not. I'm going to get into the EIDL in a second and what's happening there. So loans for borrowers, you have the SBA 7A loans, as you see on the left-hand side of your screen there, the 504 loans in the middle, and then the micro loans to the far right. And these are just some of the few. You also have the 8A, which is a mentoring program, not exactly a loan. You have the Community Advantage program for newly established businesses as well as startups. And I've created a separate video on just about all of these that I'm going to link you to down below in the description. I recently made out a video series on the SBA EIDL versus the SBA loan. So you might want to see that one down below. And SBA EIDL versus unsecured term loans versus merchant cash advances of any sorts, and a bit more material so you can learn more about what those options are. And there will also be a free 6-step pre-approval lending checklist to get you approved for funding much faster down below, with the addition of completing a questionnaire to get a personalized and customized email response for your best funding option and options. Look, at the end of the day, you want to make sure you're not going to some wrong source, some fluff, theory-based, scam, out of date in today's market. They don't really show you everything broken down detail per detail, because let's be honest, everything you see on a page isn't exactly everything they're telling you. Even on a call or however they get a hold of you via email, they keep harassing you, pressuring you to do something. I don't do any of that. You can speak to a lot of people that I've helped, and I've helped out a lot of businesses get funding as a business loan broker / agent expert. I've been doing this for quite some time now, and I've seen just about everything in every industry. And I know what you could get approved for. I know what the situation, if it looks like this, then this is the way we need to go towards, and so much more. But this will be down below. It'll look something like this, more or less. Check that out. And literally, you can fill this out in less than 30 seconds, and I will evaluate, analyze it, and give you a proper response back via email on a huge amount of information. You're not going to be overwhelmed. I want you to know that. Don't feel overwhelmed. It's going to have a lot of great stuff. You wish you would have had this from the very beginning, so you're not wasting time making mistakes after mistakes. So these are quite a bit of the options: the microloans, Community Advantage program, the 504, the SBA 7A. And I made separate videos to these down below in the description, so you can learn more about them. But we can go here and see a little bit more of what you're seeing. Find lenders, 500, get 500 to 5.5 million to fund your business. Then we have working capital, fixed assets like furniture, real estate, machinery, equipment, construction, and remodeling, as well as stuff like accounts receivable, which is the primary way that the SBA likes to receive collateral, is through unpaid invoices. And then they look at a bit of other ones. Eligibility, you can see that. Be a for-profit business, do business in the US, have invested equity, exhaust financing options. And when they say that, hey, you couldn't get approved traditionally this way through this bank, or you couldn't go through it through a credit union, you couldn't turn to your friends and family, your savings account anymore, whether it was completely withdrawn or you just couldn't do it anymore. You tried other financing options online perhaps, and they didn't work. And there's a reason why those didn't work. So we can revisit those and see what you currently need. And then loans for exporters, you can see that there, and a bit more. But what you want to do is go through a trusted provider, somebody that can help you, somebody that can explain it to you properly. So it's not as simple as just going into a site like this and going in there and finding out for yourself. it's better to go through an expert like myself because the landscape of all of this completely changes and you won't get the amount of information you need. And a lot of this stuff we can do in-house. So there are a lot of benefits, payment structures and so forth, and a lot of stuff that comes with it when you go through somebody like myself as the expert in the space. And I've helped out not only with the SBA, but all other forms of products. And if you've been watching me for this for some time, you would know that. So this may look a little bit of something you've seen in the past, but this is the fastest and easiest, most simplest SBA 7A process out in the market today, and it's called the Hybrid SBA 7A Loan. Now, before I go even deeper into that, just so you know about the EIDL, funds have been exhausted. Maybe by the time you're watching this, there will be a whole completely replenishment of it or something is changed because the market right now is consistently and rapidly changing. Like not too long ago, the basis points for the interest had changed from 4.75 to about 5.5%. And we're going to see that number increase and it should be going up. So 5.5 now at prime rates, maybe 6.5, 6 points and above. And so just know that if I say 5.5 today, that could change in a little bit of time, and I'll always keep you up to date. But the thing we shouldn't look at primarily, and I know it is an SBA 7A loan, so interest rates are so attractive, but it's less about the interest and more about the benefit of you taking the funding. That has to exceed your repayment. It has to exceed the interest rates, especially when we're talking about non-SBA options like unsecured term loans, merchant cash advances, even at times the lines of credits and other forms of financing. There may be more medium to higher rates, but the difference is, can I get a longer term is what you have to think about. Try to get a longer term if possible. And if not, what does my repayment look like? So if I get a longer term or not, what does my repayment look like at the end of the day? And can I afford to pay that back? A lot of business owners will come to me and tell me, that's rather high. How do people afford this? And the way I approach that, and I usually like to ask, how much are you involved in your finances? Do you keep track of bookkeeping, accounting? Do you have an accountant? Usually you have somebody who does that all for you. So you can handle the business operations, the sales and the marketing, et cetera, whichever one more or less. But a lot of business owners are completely fixated on, I want a lower interest. I just need a monthly repayment. Yeah, but the weekly one makes more sense because you want to have more coming out of your account on a monthly repayment as what I would rather go for instead of doing one big chunk at the end of the month. And what you're going to see a lot of the times, especially in today's markets, you see fixed rates, but now you're seeing a lot of more variable interest. And what that means is instead of paying, let's say, on an interest rate on a SBA loan, usually prime rates of 5% plus 1 to 5% or so. So you can get in between 7 to 9% these days, or even if the interest goes up, you could probably be seeing 7 to 10% or so. And then with variable interest, it might be somewhere between 7 to 12 or 7 to 13% in some cases. And so every 90 days or so, every quarter, what happens is there could be an adjustment because of the market in your industry. It has to be sensitive to it. So the prime rates come up. That means the variable interest rate may have to go up a bit. But that doesn't normally affect you on a cash flow basis. At that point, there are other products that may, but cash flow is less of a concern at that point. What it has to make sense to you is that the benefit exceeds the repayment. And if you're consistently fixated on, hey, I need to get 10% and below, or I need to get anything below 15%, yeah, but you have collateral. Some of these SBA products are non-collateralized. You may have to put 10% down, 10 to 20% down, or do you have any invested equity in it, etc. But you have to think about it. If you're looking to get approved for an SBA but don't qualify or don't want to wait, this one here, I'm going to get into it. I'm going to tell you how long it takes, usually 6 to 8 weeks, 1 to 3 plus months or more. Do you have that much time to wait? If not, maybe these other options will work. Well, I don't want to have to give up equity. Well, you're looking at interest rates between 19 to 40% in your case. In other people's, 19 to 70, 70% and above in some cases. Just make sure you go to the right source through me. I deal with the best underwriters and the best team of lenders for sure. And so the hybrid is 2 separate loans. One is an unsecured financing product, term loan, line of credit, or cash advance, which can be funded easily and quickly, extremely fast. Talking about like 1 to 2 days, 1 to 5 days, sometimes same day instant approval funding within 24 hours or so. It depends on the profile we have to look at, but it is much faster and you don't have to offer up collateral. That's what it means by unsecured. The other loan is the 10-year SBA term loan, which we can get a letter of intent with a couple of days, but takes 6 to 8 weeks for you to actually receive your funds. So my question to you is, we're going to go through the qualifications, but does it even make sense for you to go for this option if you want to wait that amount of time? And the thing is with the SBA 7A, unlike the EIDL, and I spoke about this in the other video, the SBA EIDL versus the SBA, look down below for that so we get a complete look. I compared and contrasted them, showed you a bit of this too. The EIDL mainly used for COVID relief, not primarily used for growth and expansion. That's not what they were accepting people for. Hard economically hit people in hard economically hit areas, industries, etc. Government shutdown, supply chain issues started arising a lot more even thereafter. But COVID relief, SBA 7A is growth and expansion. Don't let it be your primary use of funds is for payroll, for paying off debt, and then you're thinking about using it for a project for business and growth and expansion, and you're going to get approved for. That won't happen, even if you're doing well enough in revenue, which I'll get into some of the qualifications. Growth and expansion is a primary focus when lenders are getting you approved for. And the other part of this is our SBA loans can go up to 5 million. A business needs to be generating at least 120K a year in gross revenue and a 660 plus FICO credit score with 2+ years in business. But that's just to put it in the ballpark of, hey, if you have 120K plus, then we can look at getting you an unsecured financing product like a term loan, a line of credit, or a cash out advance. So that's where the 120K primarily comes in. But for the SBA, you want to be doing more than 200,000, more than 300, 400. You want to do 500,000 and above annually in revenue. Nothing like 120, just below 200, 300, in some cases 400, 500,000 and above is usually the sweet spot, especially in today's markets when business owners are trying to get funding. The most attractive solution has become an SBA loan. Yes, when other forms of financing are becoming a bit more limited, but does it make sense? Do you even qualify? So generally speaking, to get even assessed for the unsecured financing products such as a term loan, line of credit, or cash advance, and that's where the 120K 660 part comes into play with the 2+ years. 2+ generally is for an SBA, so yes, that makes sense. 680 and above, I would say better for the SBA 7A product. 700 and above is what you want to shoot for. In today's market, generally it's 725 and above, and that could shift over time. But that's what you want to look at. And sometimes 650, sometimes 660, but it better be incredible. Better not be, you have to have limited debt to income ratio, less than 43%, credit utilization, less than 30, less than 35%, and keep it minimal. You're making your payments. You're not having any late payments recently. You're not having a huge chunk and then you're not paying it off on time. You're pushing it out. You have too many inquiries in the last 6 months, 12 months, late payments, anything standing out, derogatory, anything that needs to get fixed, and it's just not enabling you. A background check that's been reported, liens, you have bankruptcies, foreclosures within the last 3 months, the last 3 years, excuse me. We don't want to see any of that. It needs to look spotless pretty much. It's like a bank approving you. It needs to look really, really good, especially in today's market. And then the profitability is a huge part. We're looking at 10% profit, if not more 15 to 20% if you can get in that range. I spoke to a few business owners recently, and they're doing 30% profits. It's amazing. Minimal debt, high on revenue per month, but primarily what we look at is profitability of your business. 10% and above. Don't be always fluctuating. Don't be going into setbacks because we cannot approve you for up to 10 years in terms. Usually it's 5 to 10 years with working capital, it's growth and expansion, unless we're buying a business. In some cases, it can go 10 plus more for equipment, and it can be for real estate up to 25 years. Usually that's what you see with commercial and so forth, a few other things. But what you have to look at is this should be used to finance bigger projects with a greater return on your investment, especially in the long term, not just a quick return on your investment when we could be looking at a short-term financing between 3 to 11 months or just 1 to 2 years. But because you want comfortability, that's not what's at play here. We have to make sense of your use of funds. If you tell me I want 3 cargo vans, or I want 1 cargo van for 50,000, and then I'm going to use the rest to buy more inventory for 100,000, okay, making a little bit more sense. But you've done this before. You know your business well enough that 100,000 you put into your business for inventory, it's going to reduce. It's going to turn a profit, and it's going to help your revenue go from 100,000 per month consistently to 200,000 in the next 8 months. So why should you get 2+ years? doesn't make sense. You don't want to be in debt for that long, no matter how low of a payment it is. I recommend always paying off as fast as you can. But if you need something for a longer term ROI, there are reasons for it. For bigger purchases on equipment, on top of that, inventory. The key point today is yes, you can finance one big thing or a couple of one big thing, but you want to have multiple things. Like I have a lot of inventory, I have 300,000 in inventory that I'm going to get off my shelf in the next 2 years, and it's going to return. I'm going to be doing 300,000 extra per month. I'm already doing 100,000, 300,000 in the next 2 years or something like that. Then I have two pieces of equipment that are large. Then I have marketing and advertising on top of that. Then I have a new building that I'm going to move into, etc., or two more buildings. And I have this huge home construction project. And there's a lot of different things for different industries, but it needs to make sense. You just can't say, hey, well, I qualified. I have the 500,000 and above. I have 680, and I have 2+ years in business. Why didn't I qualify? Well, the profitability, the credit is huge. Those are the two biggest things. We look at your debt to service ratio, and we make an assessment of that versus your profitability, and we can determine how much you can actually get. So that's what we want to look at. We will need to see at least 3 most recent business tax returns. Sometimes it's 2, but for the most part, it's 3. And 3 most recent years of year-to-date financial statements. So 3 most recent business tax returns with personal tax returns included, and then year-to-date financial statements. The SBA goes primarily off of credit score and profitability of your business. So projection value is even greater too. When we look at profitability now, you're saying I'm going to get profitability an extra 20 to 30%. And then I'm financing these bigger projects where I don't want to be given 8 months. I don't want to be given just 18 months. Even if I qualified for that, all I need is 18 months. Why do I want to go into longer debt? The projects don't make sense. I won't get approved for it. So benefits, monthly repayment, fixed interest, but could be variable interest as the market keeps shifting right now. Sometimes every 90 days per quarter, if need be, there's a revisit of it and say, hey, you had 7.5, and now we have to raise it up to 8.5%. And then the next 90 days probably it's kept the same, and then it's kept the same throughout. And then we say, hey, we have to raise it up by 0.5 to 10%. This is what we see in the market in your exact industry. We have to do that, taking too much of a risk by not. And so there's a lot of stuff that happens, prime rates plus 1 to 2% or so. So more like 7 to 9% you're seeing today. And it could be variables from 7.5 or so to about 13% in some cases. So very relatively low interest, underwriting checks. Credit is what gets people. SBA 7A loans are based on profits, at least 10%, low debt, low credit utilization, minimal inquiries, nothing bad on your credit reports and so on, less than 43% debt to income ratio, less than 30 to 35% credit utilization, nothing outstanding, late payments, something that when I look at, if I were to look at your consumer credit reports, just off of that, not even Business Credit Bureau reports, what I want to see is, whoa, okay, I don't want to see these late payments. I don't want to see anything outstanding, background stuff, liens, bankruptcies, foreclosures, anything more. I just have breached the surface. There's a lot of stuff like child support. The list goes on and on. That's some of the stuff that does get people down and not approved for it. Nothing bad on your credit reports and so on. Plus, you have to demonstrate significant use of funds for growth and expansion and not just recovery like the EIDL. This is not what that is. You'll need a 155 plus FICO SBSS score. Business liquid credit is what it is. But sometimes you can override the 155 business liquid credit when you're getting over 350,000 in funding, and if cash flow looks clean, you can show strength in the business experience. If you have in your FICO credit revenue and more, then we can sometimes look over the 155 FICO SBS score as long as your credit is top notch, and usually having a higher credit score than our consumer credit bureaus very much helps, and it can help override that in a lot of cases. So documents that I would need if we were to proceed forward: 2021 business bank statements, and this is relative to the year we're in. So going into 2023, we will probably need your 2022 business bank statements, right? And then 2020 and 2021 profit and loss and balance sheet. So that could be 2021 and 2022 by then. So think about it that way. Year to date or so forth, right? We can look at it a little bit more extensively. Year to date profit and loss and balance sheet, at least through Q1, that could change, especially with markets right now. Previous 3 years of business and personal tax returns, aging AR AP report. I understand not every industry has this. So if you don't, that's fine. But if you do, please send that to me, no exception. Business debt schedule, we want to see that. Even if you have no debt, I get you don't have anything that you put together, and that's fine. And I can communicate this with my team, but better be zero debt, because if I come to find, see, that's the thing. Let's save enough energy and time when we go through this the first time around. Let's not battle or however you're seeing it back and forth 2 years go by and then you're like, I never received feedback from you. Like a lot of people will do that, believe me or not. A lot of people feel they're entitled. They feel like they deserve. And I'm going to be the first to say this. You don't always deserve what you're getting in terms of the funding amount. You deserve, yes, you want to be in a better position in your business to flourish and to do this, but deserving of the funding is deserving of your funding details, as in your time in business, your FICO, your revenue per month, your lowest monthly in the last 3 or 6 months, your average monthly revenue, what's your gross per year, your net, what's your profitability. When all these things are said and done in your industry, etc., does it make sense? That's what we look at. And some of these, this is business credit. So you want to have at least business credit established. You're building accounts, trade lines, not just set up of Dun and Bradstreet and nothing's reporting, because that could look like you have no credit worthiness. You have thin credit at that point. You're not building any trade lines, any kind of accounts. Nothing more is reporting with mortgages, insurance, anything you're building up with trade lines, anything that's reflecting you're making payments and you're building that business credit. Application be sent via HelloSign, who we work with. I haven't attached it to this email, or this will say I have attached it to this email. This could change depending on if that's the best option for you. And again, I'll show you a lot of this in the questionnaire form. So make sure you submit this if you haven't. If you have, I still have to get through. Fridays and Saturdays are my catch-up days. I will try to finish some in between that time. Just this weekend, I did about 30 to 40. So it was a lot on Saturday. So I took a lot of time out of that, about 4 to 5 hours, to get as many of those as possible done. So you may have already received it. If not, please be patient. If you meet these requirements and are willing to be patient enough, I always do this. You haven't seen it in this one. Willing to be patient enough to send me your documentation via email for what is asked for right up above. And you don't I probably will highlight just this, maybe sometimes all of it. And you don't mind waiting months to get your funds from the SBA, then we can explore this option. Also remember, we can evaluate you for the term loan, cash advance, and or line of credit, so we can get those funds to you earlier. In the meantime, that's the thing. Like, I don't want to wait 6 to 8 weeks, but I would prefer a lower interest. Yeah, so in the meantime, we can evaluate you for these unsecured term loans, and we can get you approved for those. And if you take it, you can use them however you need to. And then we can, if you got approved for the SBA, we can then turn that around and say we can use that to pay off the rest of what you have here, put it all underneath one. That's the amazing part about it. So if you have a project, for example, in a home improvement, the home building space, and there's a lot of trucking, I could have gone into restaurant, etc. I've helped out all. Well, I need supplies to complete 2 builds that I need to do over the next 15 months. And I need funds for my supplies in the next 8 months. I can't wait, or in the next 2 weeks, I can't wait 6 to 8 months to receive this fund, these supplies that I'm going to put up here. And then I'm going to go take it to this project that I have to go and assess first, and then talk with my team, and then do all these assessments. I gotta have to hire a few more builders. I have to have people who are going to go out there and work under me. And then I have a few other things with equipment. And so you have to make sense of it at the end of the day. What's the best route for you to take? And you only know that. You know it from being in your business long enough. You know it from the seasons. You should be looking at what is the demand of my industry? What is it that's demanding of me? You understand this a lot by forecasting. Forecasting is just seeing what is the demand, what has been proven in the past, and not just looking at the sales history too long ago to make an evaluation of that. Everybody is very sales based, and this, you have to make it based off of different factors and understanding that I need to look and assess and forecast accurately. Get into bookkeeping, understand the bookkeeping, because a lot of business owners come to me and go, well, these unsecured term loan options and these cash advances don't make sense. Well, they don't make sense because you don't understand strategically how you're using these funds, how it will produce for you an ROI, how it would do it in the short and or long term. You maybe have an idea of it. You probably know, but you're so unaware because of your bookkeeping. You probably don't keep up to date with all of that. And there's so much on top of it. So you can evaluate for that. You can use it to pay off that. This usually doesn't require collateral with some of these SBA options. So just keep that in mind. We may ask for an asset report just to see, or an asset application, just to see what you have, enough equity, what kind of real estate properties, if any, accounts receivables, equipment, inventory, etc. Right? We may not ask for it. We may ask for a 10% down payment, 20%, usually 10%, but we might not even ask for that at all. So just be aware that just because that's the case doesn't necessarily mean you always have to offer up collateral. So that's a bonus there. So that's what you see there. I've explained the rates for the cash advance and unsecured term loan and line of credit separately below. And that's part of the questionnaire you'll see. So it might not be down below here. With your individual services without the SBA, but for the unsecured term loan of 1 to 2 years, it's 1 to 3% interest per month. So let's say you were assessed a risk factor of 2% and you only got 18 months. So that's 36% interest that you're paying over 18 months. Now, there may be yearly payment discounts, no prepayment penalty, so you don't have to continue paying towards the interest. So yeah, while 36% interest sounds quite a bit, think about it. That then can transfer if you get the proof of the SBA, however much it is, millions, and you can use that to pay the rest of what you got over here if you did. So there's a huge amount of upside to this. Don't be put down upon the interest rates. You're better than that. No, what you have to understand is strategically, how can I use my funds? And then secondly, does the benefit exceed my repayment? It's not about interest, it's about benefits exceeding repayment. And can you get a longer term if possible? If not, work with what you have. That goes for everything, not just SBA related. So if you can please send me all the document. Oh, let me come back here. I want to cover this part. The cash advance, 6 to 24 months, 4 to 24 months, you can see usually 1.19 to 1.50. In some cases, 1.19 to 1.69, but in these 1.19 to 1.5. And that's like essentially a 19 to 50% interest. And that again is because it's not collateralized. When people ask me, "Oh, that's a lot higher." It's not collateralized. The lender's assuming 100% of the risk. What they can't take property, they can't take out equity and assume that they can get paid back based off of that. But again, it's not like you need to take them and we can evaluate you for the SBA solely instead. But we'll communicate with you in the process. So if you can please send me all the above documentation, I'd greatly appreciate it. You can reply back to this email with it off. It's a part of the email that you got. And the next part, you'll still have to submit an application with us at NBC, and you'll see part of the process here. So it's on file. So please submit the application below, and don't worry about uploading the documents, as I can do all that for you when you send it to me. And you can also upload it online. Just know that when you submit an online application, a lot of the times you'll be asked to submit your documentation. And you can do it. That's pretty cool. It's safe and secure. And we'll get it in our backend. Or you can send it all to me. I can revise it right then and there as well. And then I'll send it over to the lenders and they can take a look at this application. You can see that digitally. Sometimes there's a PDF, and I'll attach a PDF to an email, and you'll see it at the very bottom that you would want to fill out. So a lot of people do that. So I'll attach a PDF, like I said, fill that out, get it back to me with the rest of the documentation, and I can send it. So here, SBA 7A, and I would recommend you get into the application with digitally. You don't have to upload the documents if I have everything, just so it's in our system. And with the application itself, the PDF one, that's sufficient enough too. You don't have to do the online all the time. So, and then there are times where we will probably ask for it. Just a little bit, things change with markets. And I did a review of the program. You can learn more about them there. SBA 7A loan option number 2, not best. You'll see something like that with different terms, perhaps different amounts you can get approved for, up to 350,000. Interest rates 30K to 49K prime rate plus 3.75%. It's usually 5.5 now. 50K to 350K prime rate plus 2.75, so about 7 to 9% similar. Loan term 10 years, term with no prepayment penalty. Monthly payments are debited from your checking account. Fees 4% referral and packaging fee, and just a little bit more. I'm going to quickly go through this because you've already learned about the SBA 7A, but you'll see this if you submit the questionnaire, if it's something you can get approved for. A lot of the times you won't see it and it's more abbreviated. Down payments, you can see that you get a maximum SBA guarantee percentage of 85% for loans up to 150K and 75% for loans over 150,000. So as far as collateral goes, the minimum the lender must take a first lien on assets financed with loan proceeds, and the lender must take a lien on all the applicant's fixed assets, including real estate. The lender is not required to take a lien against the applicant's real estate. When the equity is less than 25% of the fair market value, the lender may limit the lien taken against real estate to the loan amount. So again, not always is it going to be 100% real estate or any kind of collateral in that sense. Down payments aren't always a requirement, but if need be, are usually 10%, but can range from 10 to 30% or so. And you can see a little bit of there. No felonies, no delinquencies, and no default on government loans. It just goes for anything there. Cash flow, sufficient business and personal cash flow, no open tax liens, no recent 30-day late payments, no outstanding collections, foreclosures in the past 3 years, or bankruptcies. You can see a little bit about that. Eligibility, for profit, business owner must be in the U.S. or a lawful permanent resident. Business owner must be in the U.S. Must be open to all non-discriminatory basis. Nonprofit businesses are ineligible. Your business must be able to demonstrate repayability from your earnings. Your business must not be involved in lending, investing in real estate, religion, politics, gambling, or sex-related industry. So there's a difference in a fine line with non-occupied property, and that's usually what we would want is look at and say, is it non-owner occupied or owner occupied? So some real estate land can be brought underneath the SBA 7A with the exceptions of not being non-owner occupied, usually it's owner, so forth. But use of proceeds, working capital, example, payroll, inventory, marketing, finance, receivables, bookkeeping, and legal fees, hiring, refinancing existing debt, new equipment purchase, no construction, no acquisitions. In some cases, they won't accept that. But if you're trying to purchase an existing business through the SBA, there are other SBA lenders who will. So just in this case, it might not be. You can also get a commercial real estate loan, CRE loan, and here's that. Time in business, a little bit of that, just a little bit of the expectations. An alternative SBA loan option, 5 to 25-year terms. But again, 25 usually real estate, so the different. Requires strong credit history, requires profit on taxes, no excessive business debts, no recent bankruptcies, tax liens, or foreclosures. Collateral might be required if the loans are above 25,000, but not in all cases. Certain industries are eligible. SBA loan application, sometimes a copy of a recent credit report, and so forth. So that is that. Let me look through some of my other places to make sure I didn't miss anything. 1 second. Letting something move from the top. There we go. And if you have any questions, comments, or concerns, please voice them for me in the description so you have a better idea of how I can help you. And everything will be in the description for you to get started with. And in the comments, you can go there and give me a comment, as I was saying. But you can see some of the options. Let me look over here. So this questionnaire, again, will be down below in the description for you to get an understanding of what your best funding option and options may be, whether it's an SBA loan or not. And it's very personalized and customized to you. I care about you as the human first and foremost, above anything, and then business second. And that's how it should be. You're not a number to me. And some people will say, you're just not a number. Not just, you're not a number. And so I'll take care of you. I'll be by your side every step of the way and helping you out. No pressure, none of that. But I'll remember and to help you all the time. And just keep in the back of your mind, why are we receiving this funding and what it's meant to do for your business. A business who takes funding that's more of a medium to higher rate, but they're making 20, 30, 40,000 on that, paying back 27,000 with making 40,000. It's a no-brainer in a lot of cases, and you really need the funds. So think about that. So that'll be down below in the description, and look for all other videos on the SBA EIDL versus unsecured term loans, other SBA EIDL versus SBA loans. All of that included will be also more in depth for you to get a better understanding on how to qualify for certain options and what we are exactly looking for when it comes to the SBA. So that in a gist, I could be spending another hour to two on every single product, like the microloans, the 504s, more on the SBA 7A, Community Advantage Program, 8A, all those capital line programs, and so forth. But that'll be down below. There are a lot of SBA 7A options. Like you may get the express loan that's much faster funding with less amount that you're asking for, or the standard SBA 7A, the cap line program. They're quite a bit more. But that's what I'm going to leave it at. And again, if you enjoyed this video, please give it a thumbs up. And if you feel somebody else will get benefit out of it, please share it with them. It can be a complete stranger, a friend, or a family member. But you know, at the end of the day, you can rest your head on your pillow, very nicely sound, and that last thought that you were able to spread the word and help somebody else that you may not even have known, or they were looking for an education and just couldn't get it anywhere. And you're going to get it from the best person there is out there. That will really go a long ways. And if you haven't subscribed, please go ahead and do so. And click that bell notification icon so you do not miss any future videos I will be coming out with. That is everything for now. Talk soon.